Hey there traders, thanks for joining me for this free video from thestockbandit.com. You know, I'm always glad that you stopped by and made time to check out the content that we're putting out. So, you know, let's take a look here at the indices as we head into a brand new week of trading. Last week was not a very exciting week. We saw the NASDAQ give up 11 points. S&P, Russell, and Dow each gained a little bit of ground. Nothing real big though. And overall, it's still a market that's kind of grappling with some key levels. We're kind of dealing with some range-bound activity of late. It's not been one of those aggressive buy-the-dip types of market that we saw for such a long time. You know, really even going back into this mid to late December pullback, ever since then, every little minor dip was bought. And even this little multi-day dip, which was a little bit deeper, was only a 3-day dip in mid-March before it was again bought and produced new highs. So we saw dips get bought very aggressively until a few weeks ago when we kind of failed at this 31-34 resistance. Since then, it's been kind of a sell bounces type of market, although we haven't given back much ground. At this point, we're off about 3% on the NASDAQ, and that's certainly not a very deep correction. So right here, last week we dealt with this 3,000 level. Interestingly, that's right where we finished. A little bit fitting as we head into a new week that we're starting off at an important level. Keep in mind that was the high back here set in early March, and so that was kind of a new 52-week high at the moment. And we pushed through there, and we've come back down, and now we've been dealing with this 3,000 area. We've gotten through it briefly a couple of times. In fact, last week's low on Monday was at 29.75. But below that, we've got room down to this 28.87. And then, of course, to the upside, we've got this area right in here, which is the 30.45 area. I was just trying to hover over this, but I clicked it instead. And then beyond that, we've kind of got just another little bit of a key level there, 30.60. So we're in kind of this little range here as we've drifted lower from the highs, but this is a market that's still lacking momentum. Focus right now is on earnings, and so you need to be mindful of the stocks that you're trading and when they're reporting. You don't want to step out in front of any surprises. But in terms of the overall price action for the indices, we're not seeing any trending type of action. It's been a market where momentum has been real fleeting, and you've got to just kind of take a stick and move approach. So let's move on. Let's talk about the S&P 500. 1370 has been a major level. In fact, as I zoom out here, you can see that that was the May 2nd high from last year, the Bin Laden high at May 2nd at 1370. Well, we've dealt with it from both sides of late, and more recently it's been serving as some support. We've also got this uptrend line here. This is kind of the primary uptrend line that goes all the way back to the low in October, I should say. We tested it here right the day after Thanksgiving, and we've held above that ever since then. But we've kind of been hugging it here over the past couple of weeks, and we're not far from it. A break through this 1370 would not only break this important level here, but also undercut this rising trend line. Does that mean that we're now in a downtrend if we break an uptrend line? No. What it means is that the pace of this uptrend is changing, and we've got to just take note of that. Trend lines are gauges for the pace of the trend. It's not the trend itself. If you see a broken trend line, yes, it's a warning signal, but it does not mean a change of trend has taken place. Keep in mind, a trend is higher highs and higher lows, or it's lower highs and lower lows. And at this point, we're just kind of range bound. We have the potential for a short-term lower high here, but we would have to really undercut this zone right in here, which is about the 1335 area, to really mark a lower low. We'd really need to undercut some prior support here, and at this point we've got some room before that would be threatened. So we'll just continue to keep an eye on those levels for the S&P. For the Russell, this index fell back beneath 815, rallied back up, and tested it last week, but was unable to reclaim it. So at this point, we're kind of caught between these two levels, 784, that's the recent pullback low, and then right up here at 815. Until we get through either one of those, there's nothing to get excited about. And then you've got the Dow, which last week added almost 180 points. So it had a decent week, but we're still dealing with some key levels here as well. 13,055 was the prior 52-week high right here. It then turned into support here for a few weeks, and now it's acting as resistance again. So we've tested it each of the past few days. We have yet to really hold above it, and yet we're kind of still above this general zone down here, which is about 12.7. So we've kind of got a few levels here to keep an eye on. This 12.876 was the high from last year. We've somewhat respected it, but really I think the big levels right now are this 12.7 area, 13.055, and then right up here around 13.3. So there's a look at the indices, okay? You're looking for some trade ideas, stop by the site at thestockbandit.com. We offer a free trial to first-time visitors, and we'd love to show you what we're all about. But aside from that, enjoy the week ahead. Trade well. Thanks for stopping by and watching this video. I will have more for you soon, but until then, trade like a bandit.